Hi, this is Mike Maloney with Jeff Clark and Adam Taggart once again. Jeff, how are you doing?
I'm doing great, Mike. And yes, we got the whole gang here for today. So, Adam, thanks again for joining us this week.
My pleasure, guys. Thanks. Just great to be back. Thanks for having me back on.
All our usual segments plus a great meme of the day. So, stick around for that. So, we're going to jump right in here. So, our first thing for the article of the day is some major headline news today. It's in multiple sources. This one's from Zero Hedge. Biden unveils a $6 trillion budget that will raise federal spending to the highest post-World War II level. And this is a budget. It's a proposal. It's not necessarily gone through yet, but with Democrats in control, the bulk of this is likely to go through. And it says that annual spending under this budget would go to 8.2 trillion by the year 2031, which would put us at the highest since World War II as a percentage of spending to GDP, as the budget deficit to GDP, pardon me, which would be 1.8 trillion next year, 1.6 trillion by 2031. The real issue here is the debt that stuck out to me was the debt to GDP by 2024. In just 3 years. It'll be the highest level in American history and surpass World War II deficit spending. So, Mike, this is kind of crazy, but what's your reaction to seeing this kind of budget proposal?
Well, the budget proposal, the things that you've pointed out, is the absolute rosiest scenario because of the way they do accounting these days and the lies that are baked into the cake, basically. The budget, if you go back and look at history, government history, you'll see that the budget and then the true deficit a year later are two different things, first of all. Second of all, back in World War II, there weren't a whole bunch of unfunded liabilities, and those unfunded liabilities aren't counted in the deficit. But we keep on making more and more and more future promises. And with this spending in these proposals, there's going to be even more of them. So you can pretty much count on whatever it's saying being like times two. And really, when you include unfunded liabilities and stuff, we're already way over World War II.
Good point. And Adam, before you comment, I want to point this out that Janet Yellen said just yesterday, she said, quote, "There is a lot more we must do. Big fiscal policy is required to address the inequalities in this country and to build an economy that works for everyone." So, Adam, you're on board with all this, right?
Please don't get me in trouble with the viewers here. Yeah. Look, I mean, this is just big government gone wild, right? I agree with everything that Mike said. The one thing we can really count on 100% here with these government projections is that they are going to be on the low side. When it comes to spending, the government's estimates are always lower than what reality turns out to be. I want to be, I want to be sensitive and a bit understanding of the scope of the issue here. I mean, from an infrastructure standpoint, the title of this article is the $6 trillion for infrastructure. That's actually a pretty realistic number in terms of what we need in order to repair this nation's badly under-maintained infrastructure and to invest for decades to come of future economic activity. The big question, though, is can we afford it? Now, obviously, the current administration thinks so, and they are going full tilt to pursue that. But the numbers that you just mentioned there, Jeff, are staggering. And look, I think infrastructure is something that we actually need to do, but you have to have an adult conversation about it, right? If you're going to ramp up spending on that, what are you going to take spending away from? And we're not having those discussions, and we're getting, we're saddled with these massive entitlement programs that Mike was referencing. And, that's a circle that's going to need to be squared. And we're just not even beginning to have those discussions. So I do think that is a reckoning that's fast heading down the pipe here. But, just to bring it sort of the main theme of what we talk about in these videos, I think this really is the administration declaring war on the purchasing power of our currency. I just don't see there's any way that we don't see anything but just a asymptotic decline in the purchasing power of the dollar if these projections come to fruition.
Yeah, good point. And I just want to make clear that we're not trying to be insensitive, like Adam is saying, to things that might need done and people out there, citizens that might actually be hurting. Our whole beef, my whole beef, I'll speak for myself, is you're creating currency out of nothing. You're not backing it with anything, and you're creating way too much of it, and there will be repercussions of that. So
yeah, and sorry, just to interject in this, I'm sure Mike's got more intelligent things to say on this than I. But you mentioned Janet Yellen, and to me, that is just in many ways sort of the height of hypocrisy, which is, they're trying to justify all these policies, wrapping it in the cloak of, we're trying to raise equality. But it is these exact policies that Janet pursued while at the Fed, and that her follower Jerome Powell is now following, and that Janet is now supporting as head of the Treasury, that are completely exacerbating the wealth gap. I mean, they are rewarding the top 1% at a historically, the most generous rate it's ever been in history, at the expense of everybody else. So I think it's just incredibly disingenuous to portray what they're doing as helping inequality, where they are the chief abuser of it.
Yeah, Mike, they actually are the big cause of this inequality. Is that a fair statement?
They absolutely are. But what really gets me is that nobody believes in personal responsibility, freedom, and free markets. We're looking for the government to do more and more and more. And when you look at the top down, where society is controlled by the government, that always fails. And, we ask, well, who's going to fix the roads? Who's going to do this? You could just contract a bunch of the parallel highways going one direction and the other direction to competing private contractors and turn the easements into a source of revenue for the government instead of a cost for the government. And if you've ever been on a private toll road, they're usually great. They're far superior to something done by the government. You don't experience the traffic problems and the potholes and just all the stuff that comes along with a government project. And so you could make a source of revenue from this. It could be much better and at a much lower cost. People go, well, the government's paying for it, so it's free. Well, I would much rather pay a private company per mile that I'm driving than pay the amount of taxes that I don't know the exact amount that it's costing me to drive on a mile of road, but it's got to be less through private industry when you don't have the bureaucracy absorbing. So, you tax a certain sector, a certain number of people, and then you run that through a bureaucracy, and everybody has to get their cut before it actually goes to the department that's going to create the roads. Why not just pay the department that's going to create the roads instead of paying the IRS and the Treasury and Congress and the whole the department that is in Washington, D.C., and then all of the state and local departments that administer all of this. The amount of economic energy, I call it, that is lost through this process, there's just no way that the government can do anything better than the free market can do it. It's much better to have people open up their wallets and vote for what they want society to be than for some politician to tell us what society is going to be.
Yes, good point. And not to dwell on this topic too long, but one more quick thing that Dan, our producer, just sent me on CNBC, Janet Yellen saying the government is operating like it's 2010, and she's calling for even more aggressive spending than what we've already had. She's telling Congress, step up your spending. So this is a trend in motion. This is not going to stop until the system resets. So I'm sure glad I own gold and silver here. Okay, guys, well, on to tweet of the day. This is from Documenting Bitcoin. And this was surprising to hear. Mike, you and I talked Tuesday about Ray Dalio buying Bitcoin, saying he'd rather own Bitcoin than bonds. And here yesterday, Carl Icahn, another billionaire, came out and said now he wants to get into crypto in a big way. So, Mike, this trend seems to be picking up a little steam here. What do you think?
Yeah, isn't Carl? Doesn't he also have some gold in his funds and so on? I believe. I think this is the slow exit from the U.S. dollar is what's going on. There's people trying to protect themselves from. This isn't just somebody seeing that there's potential gains here. It's somebody that's seeing that, yeah, there's potential gains. I could do really well, but there's also a safety aspect to it. They're running to safe haven assets, and I think that cryptos, just because they're not controlled by governments and central banks, that they're going to be viewed more and more as a safe haven asset. I still trust gold and silver the most. They've got the 5,000-year track record. Adam, what do you think?
I'm right there with you guys. And while I don't have the experience that you've had more than I, Mike, on investing in following the crypto space, I've been trying to be a fast student of it. And I agree with you. And I think people like Carl Icahn are getting into it. A fair question right now is, hey, has the price become too speculative? Could it go lower from here? And I think we can have a big debate about that. I don't think that Carl cares about that. To your point, I think Carl is buying it for the store of value properties. And right now, as more and more people are waking up, and the people who have been successful value creators are leading the pack here. We talked about Sam Zell. We've talked about some of these other big billionaires who are moving into assets like gold or cryptos for the first times in their careers. I think they're doing it for what you just mentioned there, Mike. They're not doing it necessarily because they think that they're going to, be richer in 6 months and it's a good trade. They're doing it because they see the purchasing power of the US dollar getting destroyed for all the reasons that we just mentioned, and they are looking for safety.
Yeah, and this is the smart money moving in. I really do think that there's no central bank that holds cryptos. They hold gold, and there's a reason for that. And so I think there's the potential that both will do well. I think gold is almost guaranteed to do well.
I agree with that, and I'll just give a little commercial. I did a couple of recent interviews with people who are extremely bullish on the potential of the precious metals in the long term, like you, Mike, but they're really predicting that they're going to be taking off quite quickly. And maybe at the end of this video, I can give a little bit more detail around that.
That sounds exciting. Yes. So, well, listen, if you're liking this video, please hit that like button down there for us and the notification bell as well. So on to charts of the day. And we've got a couple charts here, so something a little different. This first one is from Documenting Bitcoin. And it says here, Venezuela has the third highest level of Bitcoin adoption in the world, as people are increasingly use it to mitigate economic instability. And he shows some things here. Here are some basic items in Venezuela next to how many bolivars, the local currency, it takes to buy them. And this is quite amazing. There's a whole chicken and how many bolivars it takes to buy one whole chicken. There's 10 sticks of carrots there. There's one roll of toilet paper and how much it costs. And if you look on the link for this tweet, he does list the source for all this below there, which is from Reuters. So this is probably pretty accurate with the hyperinflation that's going on in the country. And then another chart is from Adam Taggart, and it shows he tweets here, retweets something from Sven Heinrich that says, at least there are signs of inflation cooling. And it's a chart of steel futures. And of course, it's not cooling. It's just gone completely vertical, no let up in price whatsoever. Adam, you say jumping Jehoshaphat. So what's your reaction to all these inflation indicators that we see out there?
Well, to be clear, my Twitter feed editor said jumping Jehoshaphat. I said something less publicly shareable when I saw that chart. But yeah, as I look at those two tweets, I mean, the first thought I have is, geez, I'm really glad I don't live in Venezuela. But it's hard to then look at that chart for steel futures and not feel like we're fast on our way there. I mean, those futures have quadrupled since the beginning of 2021. And, some of that's due to, pent up demand and supply chains coming back online and stuff like that. But a huge part of that is due to all the stimulus that's been flooding into the system here. And that's the trajectory that we're on. And we've talked a bit about inflation and the risk of it becoming higher in past videos that we've done here. So I won't rehash it. But, getting back to the Zero Hedge article we started with, here's the last line from that article. If passed in its current form, the federal government would spend what amounts to nearly a quarter of the country's total economic output every year over the course of the next decade. And as Mike said, that's probably lowballing what's going to happen. So, if that is the future trajectory that we are going to head down, and it's looking increasingly like it will be, I shudder to see at what stacks of dollars it's going to take to buy that chicken.
Yeah, good point. So, Mike, you've actually predicted hyperinflation would come to Venezuela years ago. Some people have been criticized you for that, but here we are. It's obvious and it's been in place for several years. So what's your reaction to what's happening in that country right now?
Well, you see when Hugo Chavez won, it worked for a little while, but they were nationalizing the oil industry. And that causes other things to not work, and they have to nationalize this, and then stuff starts getting out of control. And it's really falling apart under the Maduro regime. But in that video that I did in 2013, Venezuela Chaos to Come, I show the annual report on economic freedom. And Venezuela had dropped from like the 60th most economically free country down to the very bottom spot, 152 out of 152. And when you take a look at these ratings, they put it into quartiles. So there's 4 different sections. And what you look at is the most economically free countries tend to be the most prosperous countries with the longest lived populations. They're happier. They have less child, labor problems and just everything, less pollution. They're much better off in the most free countries, and the least free countries where the government tries to do everything, which we are now trying to do. Those countries, the people their lifetimes are almost 20 years shorter. And there's a related article that I just looked up that's from Reuters, and this was 2017. And it says Venezuelans reported losing, on average, 11 kilograms. That's 24 pounds of body weight. And almost 90% live in poverty. That was 2017. So I suppose it's a lot worse now. But going back to the photos, the tweet with the chicken and the carrots, the last one is a stack of bolivars required to buy 1 roll of toilet paper, and there's much more paper in the stack of currency. You're much better off just using that. You'll get a lot more wipes per bolivar if you don't buy the toilet paper with it.
Oh, golly, that probably is a really effective hyperinflation metric to track.
I would bet that it is.
Wipes per domestic currency. Yeah.
Yeah. By the way, one of Adam's followers wrote in and asked, has any reserve currency, world reserve currency, ever gone into a hyperinflation? And, I'd sort of say he's got me there, but, I'll have an answer at Adam's Wealthyon conference. I believe that's coming up on the 5th, Adam?
Yeah, thanks so much for mentioning that, Mike. Yes, it is. It's Saturday, June 5th. It's an online conference. If you can't watch live, everybody who registers will get replay videos of all the speakers, and you are going to be one of the honored featured speakers there, Mike, as are you, Jeff.
Yes.
And in addition to that, let me just quickly dial through some of the highlights of the other speakers. There's Lacey Hunt, there's Grant Williams, there's Stephanie Pomboy, there's David Hunter, there's Lynn Alden, there's Matt Tybee, as well as others as well. But it is going to be a great gathering of minds. And I just saw David Hunter's presentation, and I won't give too much away except to say that I was amazed for how bullish he is on gold and silver and the mining complex. Mike and Jeff, I think you guys are pretty bullish guys. You don't even come close to David's predictions on where he thinks the prices of the precious metals are going to go this year. So if you're interested in that, folks, just go to wealthyon.com/conference to learn more. And if it sounds good, sign on up.
I'd also like to suggest that people watch the Rick Rule interview that you did. It was phenomenal.
Thank you. And really all the praise goes to Rick. For those of you who don't know Rick Rule, he is a natural resources investor. And he's one of those investors who doesn't just pour through the financial reports of the companies. He actually goes out to the mines themselves, gets his boots dirty, talks to management, actually looks at the projects firsthand. And it's a great interview. Rick shares an unbelievable amount of wonderful insights, and partially because he just retired. So he's no longer constricted by regulations. So he calls himself the new emancipated Rick Rule. He's able to share a lot of information he wasn't able to previously, but he shares his top 5 picks for mining stocks, which was something he couldn't do beforehand. And these are the ones that he thinks are going to be sort of the best set it and forget it long-term investments. And the video is worth watching just for that list alone.
Yes. Yes, I'm preparing my presentation now to speak at the conference as well. It'll be on mining stocks. If you're interested in that, it'll be a bonus video. So, well, on to some viewer feedback real quick here, guys. Mike, this is from Paul Coleman. He says, so silver is 40% from its all-time high, meaning below its all-time high. Yet global debt has gone up 270 times since 1980 through 2021. And he says silver is a no-brainer. What do you think of that, Mike?
I don't need to add a comment to that. I mean, he's got it. He just absolutely nailed it. What do you think, Adam?
Yeah, the only thing I'll add is, again, my day job is interviewing a lot of these different financial and economic experts. And what I like is when people who have different approaches come to the same conclusion. And there are folks like you and I, Mike, who I think we approach it more sort of philosophically. We sort of look at the long arc of history. We see what's happening with the currency. But when I see guys who are much more tactical, who are having to make decisions with big funds about, I need to get a return for my investors in the next couple of quarters. What am I going to invest in? When they're also coming onto the page and saying that silver is looking the best they've ever seen it, and they're going into it in a big way, I find that confluence of different approaches really validating. So that's what I'm seeing right now.
Yes, I absolutely agree. When there's going to be a day where everybody rushes into this, and silver is such a tiny market, it just can't take very much inflows of currency all at once. And when the funds all decide that they've got to protect themselves and that there's big gains to be made, it's going to be some real fireworks.
Yes, absolutely. It is a very tiny market. So, well, on to our meme of the day. So this is a pretty good one for Mike. But first, if you haven't read his book, you can do so for free. The link is down below, so you can go ahead and grab that and read it for free. So, Mike, I've seen this meme. So tell us about this.
Well, one of the things that socialists always say is, well, they didn't do it right last time, so this time we're going to do it right. So here's a guy walking down the street with his girlfriend. He's a socialist. He's looking at a fictional country, and his girlfriend is mad, and she's Venezuela. The next one is Iran, USSR, North Korea, East Germany, Cuba, and Cambodia, and on and on and on. It has never worked. When you go collectivist, you're deciding on economic suicide.
Very much so. Very good. Well, thank you guys for joining us for this video. Thanks, Mike, and thanks, Adam. We'll see you next week.
Okay. See you, Jeff. See you, Adam.
Great conversation. Thanks, you guys.